Hi, Gabriel Josiah here. All right, again, we'll be looking at our discourse on financial statement analysis. Okay, so we'll be talking about the fourth unit. Last class, we looked at the third unit, and we spoke about the financial statement analysis and how you apply it to the case study exams. Okay, so right now, we'll be looking at the definition of financial statement analysis. So in the exams, you are required to perform financial statement analysis. All right, so right now we'll look at the definition so that you can understand how financial statement analysis, or what is the definition, what is financial statement analysis. So I'll quickly share my screen and let's quickly look at it. Okay, so my screen is visible right now, and we'll talk about financial statement analysis very briefly. So it's the evaluation and explanation of financial and other related information contained in a financial statement. So it includes summary statements of management accounts, budgets, forecasts of a business. So it's very important to understand that it's an evaluation. So you evaluate and you explain financial or other related information contained in financial statements. So financial statements include income statements, balance sheets, cash flow statements, and other related financial information as provided by the IFRS, International Financial Reporting Standards. So it includes statements from banks reconciled into management accounts, budgets, and forecasts of a business. So the day-to-day running of the business, as it's encapsulated from the budget, as it's provided into management accounts and transcribed into financial statements, are what is used for financial statement analysis. So please take note of that. So the analysis covers the financial performance of the organization, which includes income statement. It also includes statement of changes in equity. It also includes financial position, which is the standard statement of financial position, the traditional balance sheet. Also the cash flow statement, which is currently a statement of cash flows. So the analysis covers these financial statements that you have prepared, or the examiner has prepared as exhibits to you. And in real life scenarios, these are the financial statements you present for publication or to your board to show that this is the summary of the financial activities and other related information for the period. Take note of that. Okay, so this analysis should also consider all the contextual information that is provided in the company and its operating environment. So the internal environment of the organization captures and portrays what it has gone through for a period of 1 year, and this is transcribed into financial statements. Please take note of that. Financial analysis is also the process of identifying financial strengths and weakness of a business by establishing a relationship between the elements of the statement of financial position and the statement of comprehensive income. So the statement of financial position shows the assets and shows the liabilities and the capital of the business. The asset, liabilities, and the capital, which is the funding for the business. So you must interchange the relationship between the balance sheet, which is the statement of financial position, and the income statement, which is the statement of comprehensive income, which is our traditional income statement. So the income statement has your revenue as a cost of sales, then has your gross profit, then deduct operating expenses, have your operating profit, then you deduct your admin and distribution expenses, you have your profit before interest and tax, then you deduct your interest, then you have the profit before tax, then you deduct your tax, then you have the profit after tax, which is your bottom line. So the interrelationship between the income statement and the balance sheet shows the strength and weakness of your financial statement. So you should be able to merge these two statements together to analyze the strength, the weakness of the organization, which are internal to the organization, while the opportunities and threats are external. So take note of this. It's very important. Okay, it is through the process of financial analysis that the key performance indicators such as liquidity, solvency, profitability, efficiency of operations are determined. Very important. Take note of it. Through this analysis, you will be able to know KPIs such as the liquidity, the solvency, profitability, and efficiency of operations are determined. And the short-term and long-term process of the business can also be evaluated. So if you're evaluating for a period of 1 year, you can also evaluate for a period of 5 to 10 years, or speculate, or forecast, or predict how the organization will perform in the future based on their antecedents or trajectory or the historical data provided to you. Take note of this. Very important. According to Drake, financial analysis is the selection and evaluation and interpretation of financial data, along with other pertinent information to assist in investment decision making. So other pertinent information includes like value-added statements, notes to the account, assumptions and accounting policies that are attached to this financial statement. So they help users, they help management, they help the board of directors make investment decisions for the future and the growth and going concern of the business. So it's very important we understand that as aspiring chartered accountants, we provide value in this sense, and our analysis is very, 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 very important. The value we provide is huge to the board and to management for investment decision. Take note of that. So financial statements are organized in a systematic way. They are collected based on logical and consistent accounting principles and procedures for the purpose of conveying and understanding of some financial aspects of a business entity. So this is important because financial statements help you and help every aspect of the business to perform excellent. So please take note of that. Performance of the business, it's important because financial statements will be provided from them. So these statements are organized in a systematic way. They are also collected from data from operations. So they are consistent with accounting principles, which are IFRSs and procedures, and they help to convey information for users to understand every aspect of the business. It reveals the financial position of the entity at a moment of time. Let's say a period of 1 year, 2 years, 3 years, 4 years, and 5 years, depending on the financial statements that are being provided over a given period of time. The content of the financial statements include, we've talked about them, the statement of comprehensive income, which is the income statement. I've spoken about that. The statement of financial position, which is the asset, liabilities, and capital for society. A little about that. And the statement of changes in equity, which encapsulates equity, the dividends provided at the beginning and at the end of the year. The equity position at the beginning and the equity position at the year. Is it increasing? Is it reducing for shareholders? It also includes a statement of cash flow. That is, what are the movements in cash flow from operating activities, the movement in cash flow from investing activities, the movement in cash flow from financing activities. These are very, very important statements for financials to be prepared. However, this information provided in the financial statement is not adequately helpful in drawing meaningful conclusions and to make informed decisions. So your analysis is what helps, because the financial statements may not be understood by management team or members of the board that are not from the accounting background or don't have financial literacy or don't have financial background. So it's important we understand that our analysis is what helps them. So drawing meaningful conclusions and make informed judgment, we are provided with this financial statement and analyze them for this set of team. This is important. So this analysis and interpretation is very essential to measure efficiency, profitability, and the financial health and future prospects of the business. This is key. So, when provided with financial statement, it does no value or adds no value to you until you are able to provide essential information or communication on its efficiency, profitability, financial health, and the future prospects of the business. Please take note of that. This is very important. So the focus of financial statement analysis is to diagnose the past, so historical data of what they've done, and the present, what they are currently doing, and the position of the firm together with insights into future prospects. So take all of that. The past has to do with historical data, what the company has done. Then the present is what currently the company is doing, and an insight into what they could do. And your analysis will help provide this critical information. However, the focus also depends on the person who is commissioned with the analysis. And the purpose of commissioning the analysis is to help for decision making. So as a chartered accountant or aspiring ICANN member, will be asked to provide analysis, especially in the exams. And after we've aced the exams, we'll be able to, in our work life, provide valuable advice through these matrices, these parameters of financial statement provided to us, to clients and our employers. So once we are commissioned, we should be able to add value by bringing to bear the essence of these financial statements to our clients and employers. Eugene Brigham stated from an investor's perspective that the focus of financial statement analysis is to predict the future performance of the firm. So you're not just looking at the history or what they've done in the past. So what they've done should help you predict what they could do in the future. While for management, the purpose of the financial statement analysis is to understand the present financial condition. So currently management wants to know what we are doing. How are we doing as a basis for planning and anticipating future finance, performance and financial conditions. So management are internal to the business, but investors mostly are external. So investors want to know, are their funds safe? Are their investments safe? Is the business a going concern? So it's very important that what Eugene Brigham stated here, it's very important for external parties that are involved in the business. The investor wants you to be able to predict the performance of the firm in the future, unlike management that want to know the current condition and also its future prospects. So take note of that. As a chartered accountant, this is where we add value, bring value to our clients and employers. So the objective of financial statement analysis, therefore, is to draw information which will facilitate to one, an evaluation of the strength and weakness of the business entity, and then two, the measurement of profitability of the business entity. So the strength and weakness is looking at where we are leveraging, we do better, and the weakness is where we are not doing well. So you analyze statements or you analyze your financials based on that. You measure profitability for the income statement to see where the organization is doing well and where they are not doing well. Is revenue high? Are the expenses high also? Is the profit or the bottom line very low based on high expenses, cost of sales, operating expense? It's very important to analyze your statement based on this parameters. The pattern and trend of an entity's performance over the years also, it's a determining factor in financial statement analysis, the pattern and trend, how they've been doing it. So the financial statement helps you to see the trend. So if you provided with the financial statements, for example, of 3 years, you see what they did in that 3-year period. And you see where they went up and where they went down. What are the factors? What caused it? From the details of the financial statement. The determination of the future earning capacity of the business based on what they've done in the past. What they need to inject, what they need to do, fine-tune processes, and several other factors that could be brought to bear to help the organization move forward. Also, the comparison of the entity's performance and position in relation to other entities in the same industry. So, for example, in the pharmaceutical industry, if you're analyzing financial statement of a pharmaceutical company, you look at the pharmaceutical business space and the industry. What are their competitors doing? How have they been performing? So using the financial statements of the competing firms or other organizations, you'll be able to know the current position and performance of the entity you are analyzing. This is very important. So determination of the liquidity and solvency of the business entity is also what you facilitate. The liquidity has to do with how the current assets, current liabilities are being managed. Call it working capital management. And the solvency is how the company is able to meet current and future obligations. So these analyses are very important. The assessment and growth also of the potential of the business entity from what you have seen. The life cycle of the business. Can they grow? If they are a startup, are there potentials for growing, for maturing? So this is key in financial statement analysis. So the purpose of financial statement analysis in the case study exam is to test the candidate's ability to select relevant data, because there are relevant ones and there are irrelevant ones. Analyze that information and interpret the analysis or the financial statement for informed judgment in the company's past, current, future financial condition and operating performance. So to achieve this objective, apart from the data from the financial statement, consideration must be given to other valuable data such as market data, economic data, and operational data. Looking at PES-2 analysis, for example. So this data from the PES-2 could be used to determine what the external environment and how it in fact impacts the internal environment. So the PES-2 analysis is a good analysis to help financial statements analysis also. Also events that may help to explain the company's present condition and thus have a bearing on the future must be considered in the financial statement analysis. So events, risks, external and internal to the company should also be brought to bear. Incorporate them in your financial statement analysis. They help transcribe and explain the figures comprehensively. Okay, so wrapping up, there's an expectation that a qualified chartered accountant should be able to act as a skilled analyst of these standard financial documents and communicate this information comprehensively in a language to your client based on the request your client has made. This is key. So in your process, in the process of qualifying as a chartered accountant, this training and these videos are provided to help you understand that you need to be a skilled analyst, and practicing with other financial statements, not really at work, to work in closed door. Practicing with other financial statements, you could go to other websites and download them. It's key to communicate this information to your client. You'll be skilled because most of the time when clients bring work or jobs to you to do, and you have practiced with other financial statements, you'll be able to understand that these are the same sets of financial statements, because our financial statements here in Nigeria are prepared based on IFRSs. So it's the same standard everywhere within our jurisdiction. So please take note of that your clients will draw value from the maximum work you've done as a qualified chartered accountant, and pay close attention to this to ensure that the value you are drawing will help, the value you are providing will help move a company forward, stay afloat in business, and also help the business thrive. Thank you very much. And I will see you in the next unit. Bye for now.